Mayuresh Joshi is also with us, and of course, in a bit, Mr. Tulsian will also join us. Mayuresh, good afternoon. I want to start by talking about Granules. 10% lower. Is that stock now pricing in all the bad news, or would you give it a pass?
Afternoon, Anuj. Again, with the observations that have probably come through, I think what is not really sure or rather uncertain in terms of resolutions, both in terms of timelines for what has actually come through, and again in terms of the impact that might probably come on the balance sheet. Again, I was hearing the management out, but I think once the actual impact starts getting felt and any uncertainty related to regulatory actions taken by other bodies, I think that's always going to be an overhang onto the stock. So again, I think I'll be extremely selective onto the pharma pack. I think within the large cap names, Lupin is something that I've continued to like. If the stock corrects further, my own sense is that with the kind of applications that Lupin has got in the generic space, 142 odd applications pending for approval. The US business is expected to grow around 14-15%. It's got a first mover advantage in Japan. So I think there is an addressable size of almost $14-15 billion for the US markets itself, where the company is very, very hopeful and confident of actually having 20 to 25 products launched over the next 15 to 18 months or the next couple of years. And again, I think in terms of core earnings itself, I think my own sense is that the 17% growth over the next 2 years is not ruled out, in spite of higher R&D cost of almost 12 to 13% odd. So again, I think on declines, the large cap pharma, within that, I think specifically Lupin is something that I look forward to.
Okay, since we're talking about large cap pharma, Biocon is the other stock that we should look at. 5% higher now. In fact, in the last 1 month, Biocon has gained 20% and has seen a big recovery. Now back above the 1,000 rupee mark. SP Tulsian also joins in, so we'll get his view on all of these stocks. Mr. Tulsian, good afternoon. Thanks for joining in. I wanted to first start by chatting about BEML, because that is really the stock of the day. On this 26% divestment, how much more would you give it in terms of a near-term upside, and how are you positioned on the stock for the longer term?
See, Sonia, I don't think that there is any point in taking a near-term view, because whatever near-term has to happen, one can expect still the stock to move up maybe by about 5% or so in the next or probably in this week itself. But if you take a call on the stock, I think this is extremely positive. 54% of the Government of India's stake, which has always been enjoying a very good product line and the market share, but they have not been able to accelerate the profit margins, or maybe once the induction of a strategic investor comes in with a stake of 26%, in which the government will be holding 28%. So it will be seen as a joint venture company, and the government will continue to hold the 28%. And we have seen the fortunes of many such companies having changed dramatically. So yes, the growth will be seen in the profitability, which will lead to the sharp increase in the P as well. So increase in the earnings, increase in the margin, increase in the P. But yes, for the near term, you can expect the stock to move to a level of maybe about 1200 in this week, or if not in this week, at least in this series. So I'm keeping a very positive stance, and in fact this indicates that yes, government is very proactively considering either a strategic sale outright, or maybe the joint induction of a strategic investor, a strategic promoter as a joint investor in many of the companies. So yes, highly positive on the BEML. Yeah.
Okay, Mr. Tulsian, good afternoon. The other stock of the day today has been Biocon, and of course it was one of the strongest stocks, but it corrected a bit. But within 1 month, it's almost back to its previous highs. Is the risk reward still favorable here?
No, as such, because I've been saying this for a while, about maybe 2-3 months, that I'm not keeping a positive view on the pharma stocks. And if you see the trading pattern of Biocon, this has been, for the last maybe couple of months. I agree that in this last 1 month, the stock has moved up maybe by about 100-150 rupees. But if you see that this stock has been, correcting, and then again the renewed buying interest coming back into the stock. So I'm not seeing any fundamental reason which can really justify the stock to move beyond a point, or maybe that level at which it is ruling now. So I won't be taking a positive call, or maybe entering or giving a buying advice now in the stock at the current level.
Okay, so that's the fundamental view. 12 months, 100% on Biocon, so it's been a big mover. But Mitesh, technically, how are you positioned on this one?
Yeah, so the trend remains on the upside, and we have seen the stock make fresh highs. In that sense, I think Biocon for trading purposes will be a slight positive. It's just hit the targets of around 1010, 1015, which is where the stock peaked out in October 2016. So maybe I would want to see get past 1020 and then buy it for further targets of around 1060, 70 on the upside. So wait for the stock to get past 1020, keep the stock below 1000, and look for 1070 as the possible target.
Okay, Prakash, your view as well, it moved within 1 rupee of 52-week high and then has seen a bit of an intraday profit taking.
Well, intraday they may be profitable. When I look at the basic structure, still positive. In fact, I see on monthly time frame some kind of a pattern which is known as a running correction. Now, if it holds about 950 for a while, I think it can just zoom up. So I would feel that it's still up, no sign of weakness, continue long. Stop somewhere below the levels of 950 or so and continue long. If it breaks it out, but continue lowing.
All right, let's do one thing. Let's take a short break, but we have plenty of more stocks to discuss, so do stay tuned in. Our closing bell money control question of the day is, do you see the IT exemption limit being raised in the upcoming budget? Log on to moneycontrol.com and post your responses there, and we will read out some of the most interesting responses post 3:30 today. And on to a CNBC World exclusive. Protectionism is on the rise, but I am optimistic about 2017. That's the word coming in from former RBI Governor Raghuram Rajan. Speaking exclusively to CNBC Steve Leesman, Rajan refused to comment on the government's demonetization drive, but he did open up on rising protectionist rhetoric in the Western world.
Like the US will be raising rates before the other big central banks will. So that's one factor in dollar strength. The second is the US economy is strong, and if in fact we get a fiscal boost, it may run even stronger than many people anticipate. That's another reason for dollar strength. But the third possible reason for dollar strength, and this is less understood, is if you do impose tariffs, for example, on imports, then that is also going to add to dollar strength in a certain sense. The effects of technological change have been with us for 20 years. But the fact that it has now come together across a number of countries, I think it's targeted at the wrong thing. It's targeted at globalization, at integration, which are important part of the answers to the other problems we have: climate change, aging populations. The only solution we have is through globalization to those. But for technology, we have to make the adjustments we talked about. The other big, I think, concern is a shift in growth models.
Okay.
Growth models for emerging markets. China has to change its growth model. It's working on it.
From exports to
From exports to imports. But other emerging markets that are focused on export-led growth have to also adjust. And that's a big risk. It does create political risks around the world. And it creates the risk that there would be anti-trade moves. That's problematic. But on the other hand, the world is picking up. Once again, at the beginning of the year, we are optimistic about global growth for 2017.
Well, it's actually a struggle to find stocks that are moving around, to be honest. So it's very, very flat in terms of a market move. You can see that those jagged edges on the screen. But some stocks deserve mention. Nilkamal is one stock. It's now rising quite a bit. It's up almost about 9%. It's still a bit away from its 52-week high. So at 1514, it's about 20% away from its 52-week high. But nevertheless, it's been climbing quite a bit in the last few minutes. Apart from that, Prestige Estates is another one that's spiking up for no real reason, so up almost about 5.5%, and a couple of other pharma stocks like Stride Shasun are also doing quite well. Sandeep Wagle joins in now to give us some trading ideas. Sandeep, what are you looking at to buy or sell at the moment?
Afternoon, Sonia. I would still be a little biased on the buying side. I think this is a support till 8200 is held on to. I think the way is upside. I would go with a buy in a IDBI Bank, stop loss 72, target 81. A buy in a Biocon, stop loss 996, target 1044, and a sell in a Coal India, stop loss 306, target 289.
Okay, thanks Sandeep. So that's two buys and one sell. Of course, there was something wrong with the graphics on Biocon, but that stop loss was 996 and target 1044. And on for some of the other stocks, we are now seeing some move. Syntex is up about 3.5%. McLeod Russell is up about close to 2.5%. Mr. Tulsian, we've discussed this topic in the past as well, but I wanted to reiterate for our viewers your thoughts on the housing finance stocks. DHFL and Indiabulls Housing both are up 2% in trade.
See, Anuj, last week when the stocks corrected on the fear of this sharp rate reduction or maybe the interest rate cut seen from across the board from all the banks at that time, also I've said that the pie of housing finance companies will increase substantially, and the kind of reach these all housing finance companies are having. And if you see the average ticket size, for instance, the Dewan Housing Finance is having an average ticket size of maybe about 16 to 18 lakhs, and that is giving them a very strong edge. I don't think that the PSU bank can really, eat the share of all these companies. We need to wait for the LIC Housing Finance, the first quarterly numbers which will be out. I think it is either on 13th or on 16th January. So if you really take a call, in fact, all the housing finance companies will really going to enjoy to a great extent. I am not taking a near-term view, because as such, if you take a near-term view, I don't think that any impact is going to be seen either in case of interest reset of the old loans, or maybe the immediate impact on their lending costs or cut on the net interest margin. So keeping a very positive view, and because in the same taking this same view, I am keeping positive stance. In fact, my preference of picking the stocks in this space would be Dewan Housing, LIC Housing and Indiabulls Housing Finance. Three stocks are looking quite good.
Okay, well, Dewan Housing is up almost about 2.5%. The other large cap I wanted to discuss was Tata Motors, because once again that stock is back above the 500 rupee mark, and it had got, it reported very good sales for the month of December, the JLR retail sales that came out. Mayuresh, how are you positioned on Tata Motors now? It's still a bit away from its 52-week high of 598, but do you see it get there anytime soon, and would this be a good time to buy?
Again, Sonia, I think with what we've probably seen on the domestic front, I think it hardly impacts Tata Motors in a significant manner, because I think the entire story is how JLR is going to perform. And JLR has performed exceedingly well. Now, from the numbers that we're probably getting on the JLR front, which included China and the North American sales, they've been exceptionally good. So in that sense itself, I think the trend is expected to continue for Tata Motors. And since JLR forms a big chunk of its EBIT contribution as well, my own sense is that if the volume growth continues and stabilizes going forward, I think the earnings momentum should continue with Tata Motors. Yes, I think there have been some issues related to what has happened domestically in terms of the management changes and so on and so forth. But to a certain extent, I think the four-wheeler argument still holds good across the globe. I think if the US economy is expected to improve for the better, my own sense is that a lot of stocks, including Tata Motors in the auto and auto ancillary space, which are catering to the US market, should do well. China's numbers, if they are held on over the next 2 to 3 months, to say the least, the momentum there should continue as well. Europe probably has been a little bit of a laggard, but again, I think my own expectations are reasonable growth coming through that region as well. So again, I think valuation is not looking too expensive. So yes, I think I will maintain a positive and optimistic view on Tata Motors. The only caveat here is that you should be having a holding period of at least 3 to 4 quarters. I think a year is what you should be looking at in lieu of what has happened domestically, and again in what terms the volume growth can be expected to pan out over the next few quarters. So yes, remain optimistic on Tata Motors.
Okay, let's move on now. Earlier in the day, Lata actually caught up with the top team at Deutsche Bank to get a sense of what they are expecting from equities and economy in 2017. Here's a slice of that conversation.
If you go back to the second half of 2016 as
Okay, you can watch that entire conversation that airs today at 5:30 p.m. only on CNBC TV 18. But it's time now for our Monday special Mid-Cap Mania with Nigel D'Souza, and the stock on his radar is at a 52-week high and has gained 30% in 2017 so far. Nigel, take it away.
Well, that's right. If you just take a look at the stock, it's already up close to around 30%. Even today, it's moving higher on very, very large volumes. So just keep that in mind. In the last few trading sessions, it's been on fire. What does this company do? Though the company's name is Panama Petrochem, and in fact, it's into the manufacture and exports of petroleum specialty products. Its main brand is Pan Oil. And in fact, it is quite diverse in the sense that it exports to a lot of countries. It has a whole host of variants of products To be precise, it's around 80 different variants of products. And also its clientele, it's spread across the rubber industry, it's going out to the power industry, to the pharma industry, and the engineering business as well. So it's quite diverse. I went through the audit report. Unfortunately, I couldn't pick up any customer name. So they're saying that they're supplying to a whole host of clientele, but they've not given any particular name. So that's something that, you know, we should work on going ahead. In terms of the promoter holding, that's at around 71%. A fund, Elara Opportunities Fund, has around 2.5%, and a couple of big investors as well in there. Anil Kumar Goyal holding around 2.1% stake in the company. In this fiscal year itself, the promoters have bought more than 2 lakh shares from the open market. So that's always a positive sign when you see the promoters going ahead and buy from the open market. Now, if you just take a look at the financials, that's something that impressed me. And that's the reason why, in fact, the stock did come on my radar. The margins have improved over the last 10-12 quarters from around 5.5%. It even fell to around 3.5%. From there, it's improved to more than 9.5%. That's of the last quarter. So quarter 3, you keep an eye out on the operational performance. That's going to be very interesting. And if you just take a look at the halfway mark, they've done very well. Now on the top line, there's not much growth. Though on the operating performance, there's a growth of more than 30% in terms of operating profit, 35 crores versus 26 crores, and margins as well, up by 250 basis points, resulting in the profitability at close to 20 crores. That compares with just around 14 crores. And if you just take a look at what they've done at the halfway mark and compare it to what they've done in the last few years, at the halfway mark, they've achieved more than 70% of last year's profitability. They've achieved more than 70% even at the operating profit level. So that's the PAT number, 76% at the halfway mark. Let's pull up the next chart. You'll see that even in terms of EBITDA, it's more than 70%. In terms of the balance sheet, that's quite good because there's no long-term debt on the balance sheet. There is a cash component as well in there, but I just netted it off and I saw that their net current assets are much more than, in fact, the current liabilities. That's giving you a number of around 155 crores approximately. And the gross block as well, over the last few years, has increased from around 70 crores to more than 145 crores. That's about the balance sheet. The management commentary is quite positive. They're expecting demand to pick up going ahead. They're also talking about expanding its operations, even post the recent expansion that they've done. And in addition to that, they expect demand to grow from various sectors, like the rubber space. All this is there in their annual presentation. So all these numbers, in fact, and all these details are picked up from there itself. In terms of their presence, they're currently exporting and they're looking at increasing their exports, particularly in the USA, Africa, as well as Europe. Dividend, that didn't impress me too much because the dividend has been coming in lower. And in the last year, they gave only 50 paise in terms of dividend. But I read closely and they've said that because they were expanding, that's why the dividend had come down. Now, let's see whether or not the dividend number does pick up from here. So that's something you should keep your eye out from. But obviously, we'll end with the negatives then. The key ingredient, the key raw material is, in fact, base oil. That's a crude derivative. Most of it is imported. So there's any change in terms of import rules as well, that's what will hurt their margins as well. Rather interesting company, as I said, already up more than 30% in 2017. We're only a week into the year. But keep your eye on this one. Panama Petrochem is a stock I'm talking about. Back to you.
Okay, Nigel, thanks a lot for that. Standard disclaimer, of course, this is not a stock recommendation, just interesting tidbits on some stocks. The stock that's again surging now is Biocon. It's again moved back to the morning high. In fact, Biocon, Stride, Shasun, a couple of other names in the mid-cap pharma. We've spoken about Dishman. So there is quite a bit of rally that you're seeing in some of these names. Just Dial is the other stock which has rallied a bit, up about close to 3%. And on the way down, of course, we still have Granules and Cadila, which is down a bit. Mr. Wilson, I also wanted your thoughts on Coal India. That stock has disappointed a lot of investors, but it's now trading sub 300. Any call here?
Anuj, I've been keeping a neutral to negative call on the stock, and I'll continue to do so in spite of hearing from the government, maybe the secretary level and all that the production is very much on the track and ambitious target of the production has been given by 2020. But I won't be taking a positive call on the stock because it has not been seen a performer even if you take a call for the last maybe 12 to 18 months or so.
Okay, well, let's do one thing. Let's take a short break on that note. But coming up on the other side, we'll get you a check on the mood across the dealing rooms today, as well as continue our chat with our guests. Stay tuned.
welcome back. Well, it's been a very flat day, but very volatile. It's been such a narrow range for the market today. In fact, all the indices, Sensex, Nifty, Midcap, the Bank Nifty as well. The only exception has been the CNX IT or the Nifty IT index, because if you see the Nifty IT index, that's had a different trend. Otherwise, the opening and closing for most indices are same. IT is the only one. Started at the low point, is ending at the high point. So if you have a trending day, it's on the IT index, but otherwise been quite flat. But there are a lot of stocks where we are seeing some action. So we have Prakash Gaba and Mitesh Thakkar to tell you what to buy today or sell today rather, for reverse trade tomorrow. Mitesh, you go first. BTST trades.
Yeah, so I think two calls over there. I have a C8 which is a conditional sell. If it breaks levels of 1170, I think the low is around 1173 today. Then sell with a stop at 1185 for targets of 1140. And Star or Strides Arcolab, that's a buy call with a stop at about 1139 and look for targets of around 1170.
Okay, and Prakash, what about you? Things have not changed since we, chatted at 2:30 to 3. No movement at all on the headline index, but any interesting stocks?
Yes, certainly market will be up tomorrow. Very good indication that it's going to be up tomorrow. So I have two buys here. Federal Bank looks like a good buy. I think it can climb to levels closer to 69, 70 zones, stop below 67. I also like HCL Tech. Looks like technology is going to help here. And HCL Tech can climb to levels closer to around 852 zones, stop below 822. It's given a classical reversal signal here. I think it's up.
Okay, Prakash, like your confidence that market will be up tomorrow. But let's move on and discuss some more names. A couple of other names are looking up intraday. L&T Finance Holdings. This stock is now trading at intraday high. Let's just pull out this stock. And what's interesting about this stock is that it's now trading above its major moving averages. So technically very interesting. L&T Finance Holdings. Mr. Hussain, you've had your picks in the NBFC space, but L&T in particular, what's driving this rally that we are seeing from the recent lows?
Anuj, you are referring L&T Finance or L&T?
L&T Finance, Mr. Hussain.
Maybe actually, Anuj, if you see Mr. Mariwala, who is an independent director of the company, I'm not saying that I'm not keeping a positive view on NBFC and NBFC stocks, or maybe L&T Finance in particular, but Mr. Mariwala being an independent director, having bought the shares of the company, since then it has been seen moving up. So maybe if I need to pick and choose, probably L&T Finance may not be on my buying list now, in spite of keeping a positive view on the NBFC space, because having run by about maybe 12-15% in this last couple of weeks.
Okay, well, for all of you viewers, L&T Finance was the 2:30 call that Prakash had given, right, Prakash?
That's correct.
And that stock is moving now quite a bit, up about 3.5%. The other stock to look at is Max Ventures. It's at the day's high right now, so just pull up that stock for you. There's a board meeting today to consider a preferential issue, so Max Ventures, it should come up. There you have it, 3.5% higher. Mr. Hussain, any quick thoughts on this one and how to approach it ahead of the board meeting today?
Max Venture, Sonia, you are referring to?
Yes.
No, again, Max Venture, I'm keeping a neutral view, because if you take a very long-term call for 2 years, I'm not saying that I'm not convinced with the business model and all that. So either you have 2 years view or you just give a pass to the stock.
Okay, just give a pass to Max Ventures. But let's get an insight into dealing room chatter then. Nimesh Shah is here with Trader Talk. Nimesh, the FI volumes started to pick up, but again, last 2 days it's again gone down, and today looks even lower than Friday's trade.
Oh yes, Anuj. In fact, the feedback is the volumes are down almost 25% versus the recent averages. So clearly, the larger institutions seems to be on the sidelines. Even the retail HNI activity has slowed down a little bit in today's trade. That shows up in the mid cap and the small cap performances as well. The broad sense I'm getting is maybe the investors are a little jittery about the earnings season. So it's a wait and watch before the earnings season starts kicking in. I guess that will just set the tone for the near term moves in the market. Remember, most of the brokerages or most of the street is been expecting bad performances this quarter. So I guess that's pretty much priced in at these levels. But one needs to actually see the numbers as well. So I guess that explains the lack of interest which is there in today's trade, both from the FIs or for that matter the retail and the HNI category. The one space which is buzzing off late, where there is a lot of action, is the PSUs. Within that, it's the fertilizer pack which is buzzing in trade. I guess from here till the budget, every sector which is possibly to get benefit from the budget announcements could be in the limelight. So that's where some bit of retail action is happening. But otherwise, it's a dull day of trade. Not much in terms of feedback as well from the dealing desk. My sense is it's going to be a range-bound trade in this 100-point range for the Nifty. But I guess the focus will be at least in the near term on the PSUs and some of the sectors which might benefit from the budget.
Oh yes, range bound is correct. We've seen this for very long, and you know what? One wonders which way the range would go, because now it's very hard to tell. I mean, the minute it goes to the upper end of the range, it sort of comes off a little. The minute it goes to the lower end, it rises. So, are you getting any clear sense of which way the range would break?
No, Sonia, and I tell you something, this is not a market in which you want to predict, because honestly the market is going to punish you. If you're predicting in this market and taking a call accordingly, you may have egg on your face maybe 2 or 3 days down the line. What this market is telling you is that you got to take a fresh card if you're a trader every day and approach that day as it comes. Otherwise you remain a steadfast investor and pick out good quality stocks and you stay invested, and chances are that you'll make money. But taking a 3 or 4 day call in this market can be hazardous. For now, it looks like this is in a range. At some point it will break, of course, but there's no way of knowing which way it will break.
Oh yes, in fact, you're talking about good quality stocks. Names like Yes Bank, Maruti have recovered quite a bit. I mean, they're still, they're just 5-10% away from their 52-week highs. I'll ask that question to Mayuresh in a bit. But before that, Varinder Bansal is also with us. He'll tell us about all the buzzing stocks that he's observed over the last 10-15 minutes. Varinder, over to you.
Well, some of the new names today, Sonia: PIL, Italica Lifestyle, Samruddhi Realty, Rama Phosphates, Alpine Housing and Diligent Industries. Some other small cap gainers, look at Greenwich Technologies. Huge volumes today compared to 10-day average. Keep an eye on that. Jash Industries, Shiva Fertilizers, Panama Petrochem, Jyoti Resins Adhesives, Tokyo Plus International. STI India has been on circuit since last few days. NHC Foods, Mohit Industries, Northeastern Carrying Corporation or NECC as people say, Dhampur Specialty Sugars, Kamdhenu Ispat, Tamil Nadu Petro, Transcorp International, Duke Offshore. GSS Vanguard has seen huge volumes today as well. Umang Dairy and some of the smaller pharma companies like Lincoln Pharma and Bafna Pharma. Look at mid-cap gainers, Pokerna up 20% today. All these small stocks like Graphite India, HEG has been doing well along with Pokerna. Dishman Pharma, huge volumes up over 10% today. Nilkamal, Tidewater Oil, Carbon, Goa Carbon and Bama Lorry along with Bama Lorry Investments has seen surge in volumes. Keep an eye on Max Ventures. There's a board meeting today in the evening to decide on the preferential issue to some of the investors. It will be very interesting to see how much portion of that equity will be given to new investors in this company and whether the promoters take more stake in the company. Of course, the price will be very important, but this could be interesting to watch.
Thanks a lot for that. Before we talk about some more stocks, let's get you some big opinion that we got earlier. Timothy Moore, the Chief Asia Equity Strategist at Goldman Sachs, who believes that earnings will recover in 2017 and forecasts 7% growth this year.
Well, we think 2017 will be somewhat better than 2016 for the region as a whole, ex-Japan. Price returns are up 4% last year and 7% in total U.S. dollar returns. And we think that figure will be closer to 10% for 2017, largely driven by an improvement in earnings. Our key mantra, so to speak, has been that the United States equity market gets more of the good aspects of the policies that are being proposed by President-elect Trump and less of the bad, whereas Asia gets some of the benefits of that in terms of better U.S. growth, but has more of the impediments, more of the headwinds. There are three of those that we're really enumerating. One is rising U.S. interest rates. The second related one is a rising U.S. dollar, both of which tend to be suppressive for Asian returns. The third one, which is obviously very topical, is the impact of potential trade barriers, which could be announced, or there's going to be increased news flow on that shortly after the inauguration a week from Friday.
Okay, that's the word coming in from Timothy Moore, but let's cut across to Prashant Nair, who is in conversation with Ajay Piramal currently. Prashant, over to you. Well, I'm afraid there's not much to report even at this point. So absolutely flat for all four indices, the Sensex, the Nifty, the mid-caps and the Bank Nifty. Of course, there are individual stocks that are looking good. Sudeep Bandyopadhyay joins into the last 10 minutes of trade. Sudeep, afternoon, the only pocket of strength in the last couple of days has been the PSU stocks. And, long-term investors are a bit jittery to get into these names because you've not seen a lot of wealth creation from these names in the recent past.